Most people pay taxes on their capital gains and they think it's a win. They won because they made money. And yes, that is a win, but are you really winning if you're paying taxes? If it's a way that you can legally pay zero taxes on your stock gains or even on the gains of selling a rental property while investing in real estate or in businesses that will build more wealth and help communities at the same time. This, my friends, my profiteers, is the power of opportunity zones. Now, we heard the word opportunity zones a lot in 2017 when Trump got elected the first time, and we're going to hear about them more and more because they are back. So what is an opportunity zone? Is it really the opportunity, or is it a way to take money from one community to another? Well, we're going to talk about that, and most importantly, how you can pay no taxes by investing in an opportunity zone. Before we get started, as always, like, subscribe, and share to our channel. In real life, I'm a certified financial planner, blessed to help thousands of people worldwide, but on these social media airwaves, what is given information? This information is going to allow you to decrease your tax liability while increasing your net worth. So you ready to hear about opportunity zones and how we can profit from it? Let go!
And you just wanna get paid, tired of making no money mistakes. Make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money.
So I'm just gonna ask you 3 questions. And if you say yes to one of these questions, then this is for you. Number 1, do you know you could reinvest your capital gains and potentially avoid paying taxes on them? Number 2, what if you could legally grow your money tax-free for at least 10 years? And number 3, are you missing out on one of the most powerful tax breaks created of our lifetime? If you said yes to one of those 3, then you, my friends, should be worried about investing in an opportunity zone. So what exactly is an opportunity zone? So an opportunity zone is a designated low-income area, the hood, some people say, in the U.S. where investors can receive special tax breaks by putting their capital gains to work. So what is it? It was first created in the first tax bill in 2017, and it was updated and reinstated in the big, beautiful bill that got passed earlier this year. It's aimed to stimulate economic growth in struggling communities, or we like to call it regentrification. And there are over 8,700 areas that are deemed opportunity zones in the U.S. Basically, all of our urban areas and urban zip codes that are currently going through regentrification or have the opportunity to. So everybody who's trying to buy real estate, every single piece of property that you buy should be, in my opinion, an opportunity zone because we're helping the community, but more important, we're not paying taxes. What? We're not paying taxes? How is that possible? We're going to let you know. The benefits of a opportunity zone, or in the tax code, QOF, Qualified Opportunity Fund, which is an opportunity zone. But its tax benefits, which are, number 1, tax deferrals. You get to defer taxes on the gain until 2026 or earlier if you sell the investment. Which means we buy a stock, we sell that stock. We buy for $100, sell it for $150. We have a capital gains of $50. Well, if that gain of $50 gets put into a opportunity zone fund, and we use that $50 towards the purchase of a house or remodeling that is in a gentrified area, then instead of paying that $50 in taxes This year in 2025, we get to defer it to 2026. But wait, it gets better. Because also we have tax reduction. Number 2, tax reduction. Used to reduce the tax owed on the original gain. What does that mean? That means any taxes that we owe originally, we don't pay taxes anymore as long as that money goes from the Opportunity Zone Fund into that building or remodeling, and we don't sell that house for 10 years. So you can literally sell investments, defer taxes, and then never pay them. Oh, it gets better. Number 3, tax-free growth. If you hold that investment for 10 years or more, all the gains of that investment is tax-free. Meaning, I buy a house that needs a whole bunch of work in a regentrified area or in a opportunity zone, the buzzword for gentrification. Let's just keep it real. And let's say it's $50,000. And I put $50,000 into that property. My cost basis is $100,000. And that property grows to be $400,000 10 years later. 10 years and 1 day later, I sell that house for $400,000. I do not pay taxes on that $300,000 gain. Now, if I sell that house in 9 years instead of 10, I got to pay taxes on that $300,000 gain. But if I wait 10 years or more until I buy that property, then, my friends, I pay no taxes. This is how the wealthy get more wealthier. This is why we saw regentrification take off all over the place in 2017 and beyond, because now people get to make the neighborhood better, in quotation marks, and regentrify the area and not pay any taxes. They hold it for 10 years. Case in point, I went to school at Tennessee State University, the best HBCU out there, and something crazy happened in 2017. All this money came into the area around Tennessee State that didn't come before. And we see people of other ethnicities or backgrounds, not saying it's right, not saying it's wrong, walking their dogs at nighttime. It's like, what's going on here? And it took me a while to do my research and say, oh, they're able to buy these dilapidated properties, put money into it, and hold it for 10 years. Either rent it and get rental income or stay in it. It does not matter. And after 10 years, they can sell it or hold it for as long as they want to. And whenever they sell it, they don't pay taxes. This is how the wealthy gets wealthier using opportunity zones. And if you're not taking advantage of it and you're in real estate today, you are setting yourself up for tax failure. But a key requirement for these opportunity zones, very, very key, very, very key. You have to invest the capital gain that you made within 180 days after doing the Opportunity Zone Fund. So on July 1st, that stock that I bought up for $100 is worth $150. I sell it. That $50 on July 1st, I put it to my Opportunity Zone Fund. Now, it's not a special fund. It's just a regular investment account or a regular bank account with no other money in it besides your capital gain money. That 180-day starts. So if we hold it for 2 years and don't do anything, we don't qualify. That money can be used within 180 days from the Opportunity Zone Fund into the project. And that could be for a new construction, like if you bulldoze something down, new construction in a regentrified area, or it could be for remodel. You can buy something, use the Opportunity Zone money for it in the remodeling. And if we do that, my friends, defer it for next year, not sell it for at least 10 years, and it's all tax-free. Another thing to think about as well, it has to be set up. You can't just say, I'm going to do an opportunity fund. It is steps, and we're going to give you the 5 steps right now. Step number 1, we have to create a separate LLC. If you have an LLC today, which we recommend everybody do if you're doing business, the LLC can only be opportunity zone funds by itself. It can't be our side gig. It can't be our other rental income in that fund. You need a separate LLC. And that separate LLC is marked for opportunity zone funds by itself. That's number one. Number two, of course, when we get that EIN number, because it's a new business, make sure that it's recognized as an opportunity zone fund business tied to the account that we open up. We can't commingle. We can't have an EIN number with some money coming in from here and some money coming in for opportunity zone. No. No commingling. So we set up the LLC. Get the EIN number, but it's only for that opportunity zone fund company, which is your company. Number three, sell that investment. And whatever investment we sell, a lot or a little, the capital gain, we move that into the opportunity zone fund. And that fund, as I said earlier, can be a checking and savings account, be a money market account, but it's only money that's for the opportunity zone fund company. That is just a lot of O's and F's. Opportunity zone fund company. That's crazy. But the opportunity zone fund company, that's going to be used for the opportunity zone. Number four, make sure that the property that you buy in a regentrified area is a qualified opportunity zone property. Just because that property is in a dilapidated area, it might not be deemed as opportunity zone. So you just want to Google the address and make sure it is in a opportunity zone. I'm going through the process right now with a property we're buying in Pittsburgh. Had to do some digging because there was two properties that we thought that was in the quote-unquote hood or in a dilapidated area, but they didn't qualify. The third one, it did, and now we're off to the races. So make sure that the property that you purchase is in an opportunity zoned area. Now, after that, we buy the property. But when you buy the property, it's one more stipulation. Because whatever the price of the property is, you also have to do the equal amount in rehab over a 2.5-year time period to get the full tax deduction, which equals a tax write-off at the end of the day because we held it for 10 years. Meaning, if that property I buy in that area is worth $100,000 and I buy it for $100,000, I have to put an additional $100,000 in it. So now I'm $200,000 in. Or if I buy that dilapidated property that costs $50,000, I have to put $50,000 in. So whatever you purchase it for, you have to do the same amount of remodeling over a 2 or 3 year time period. Gotta do it. Keep the receipts, my friends. Another question we get asked, opportunity zone. I don't pay for it all with my capital gains. I'm not going to sell $100,000 of stocks. I might not have $100,000 of stocks. It's okay. It doesn't matter how much of your money is from a loan, is from a refinance, is from a credit card if you do it that way, as long as some of the money is from that capital gain. So you don't got to have $200,000 and then you sell it all and then you use the gains to buy something. No. Again, using that example, $100 in a stock is worth $150. I sell that $50 gain. I put into that fund, and that fund is used towards the purchase of that house or the remodeling of the house. You qualify. It's not like it's all or nothing. It's just a portion. So you can just be starting your real estate journey and getting funding from a loan standpoint and have a sell of a stock or sell of a mutual fund and put that to the opportunity zone fund, if I can talk, and then do it that way. You don't have to have all the money from the sale of a stock. It could be from loans as well. But very important, which is number 5, 180 days from the time that money goes into that fund, it needs to be used for the purchase of that property. So for like us, it was a month and a half, 2 properties we thought. No. So now it's countdown. We got about 4 months that everything goes free and clear from a closing standpoint. We think we'll be in good shape. So with the little coins that we have, the pennies that we have, right, going into buying the Opportunity Zone house, plus, of course, a loan, because we always talk about cash out refi. Who does things for cash with real estate? You better not. This is going to allow us to now do repairs up to 2 years or 3 years, 2 to 3 years for your repairs. Keep all the receipts. Buy a property, for instance, for $30,000. It's dilapidated. Put $60,000 into the property. So now you've done more than the purchase price. So you're clear there, and just hold it and rent it out or stay in it. If you do rent it out, that rental property is growing. And if you hold it for more than 10 years, you don't pay any taxes if you sell it. But why sell it? You don't have to. That rental income you get, keep on getting it. Now that, my friends, you got to pay taxes on that. The money that you get from the renter is taxes. But if you use a tax strategist like myself, because I am a certified financial planner, we could find ways to get you deductions and reduce your tax liability because you have renters. Because there's so much things that you can do as a person who's a W-2 employee getting rental income, or this is what you do. Just got a lot of doors and you're getting rental income. There's so many things you can do from a tax standpoint because you're a business owner, and business owners do things that W-2 employees do not, and you can capture all that from a tax standpoint. So comment the word RELAX, RELAX below, and we can help you with those questions. But the Opportunity Zone, as we talked about, you can buy a property or fix up a property in a dilapidated area and follow those 5 steps that I showed you guys and not pay taxes down the road. $100,000 house becomes a $400,000 house years later. That's $300,000 if you sell it. You don't pay taxes on. This is how the wealthy gets wealthier, because they not only get the information that I'm giving you guys at no cost because you're on my YouTube. Like, share, and subscribe, by the way. Please, help a brother out. It also helps the algorithm because the more people know about this information, the more that we help. So, the wealthy, they get the information, but they execute. They don't look at this video and then 6 months later, oh, what did he say do? That's 6 months of missing out. In that 6 month time frame, if you would have executed, you could have been in your first Opportunity Zone and you could have done it all over again with the second one. This is how we build wealth, using assets and the tax code to our advantage. The real question is, my profiteers, my friends and family, next time we want to dip our toe in the real estate game, or the first time we want to go into real estate, are we going to use the tax code to our advantage and do an Opportunity Zone? If the answer is yes, you're in the right place. Comment the word RELAX for us to help. If the comment is no, you are tripping. But there we go. You now know what a qualified Opportunity Zone is, how you can make money, have appreciation, and not pay Uncle Sam, in the words of Don King, only in America, and a tax bill that got passed that, yes, helps some people and, yes, hurts others. But we're not here to be political. We're here to give you information to grow your net worth while reducing your tax liability. So, as always, like, share, subscribe, pump up that algorithm so we can help more people like you. And let's make some painful or painless profits together, y'all.